Hi, welcome to the Interaxis channel. We're talking about payments in Web3 and how Web3 is going to change, revolutionize, update payments in the payment system that we have. Now, we talked in the previous video, and I hope you watched it, about how the traditional finance payment system has evolved all the way from bartering to cash to checks to credit cards to the fintech we have now, which is Zelle, Cash App, Venmo, all the ones we see, even applications like Plaid, Apple Pay, Google Pay, all of those. So we want to talk a little bit about some of those problems that we saw, because only when we talk about where there are some issues with traditional finance payment systems is we can see where crypto and DeFi and Web3 can make those systems a little bit or a lot better. So first, some of the problems we see in TradFi. So if you'll remember, and most of you already know this, if Adam pays Ron whatever it is, and I could use Venmo, I could use Cash App, I could write a check, whatever it is, Ron's bank is communicating with my bank to get the money from the bank here to take it out of my account and put it into Ron's account. So no matter what kind of fintech we wrap around it, this is what we're looking at. This, of course, causes some bit of friction. This is a big problem. This friction that banks can impose because, one, they're keeping track of what we have. Okay, so they keep the ledger. They keep track of what assets I have, what assets Ron has, and we rely on them. And look, it doesn't mean to make them out to be bad. We needed to outsource that trust. We needed to outsource that to someone to keep track of what everyone has, and we've outsourced it to banks for so many years. We've outsourced our custody of our assets to banks for generations, for centuries. And so we now have entrusted with them the payment rails, the rails that say money moves from one place to another. And this could be a payment for something, for some services, for some goods. Ron could represent the coffee shop I went to, so the place I went for lunch. We could represent my business and Ron's business where we're transacting. But still, the friction here is bank-to-bank transfers, and only then do they make the accounting entry in our respective accounts. Now, the friction here is this transaction could actually take days, even though it might be reflected pretty quickly. That's just reflection on my app or his app or website or whatever. But this could actually take days, and we've probably all had a time when we waited for the bank to clear a transaction. We waited for money to show up in our account, and if it's above us, or if you got a check for 5 figures or 6 figures or something, hopefully you got a check for 6 figures at some point in your life, it might take several days to show up unless it was a wire transfer. And of course, if it's a wire transfer, that costs money. You have to go to the bank, you have to sign all sorts of things because you want to wire money. So that's where banks can impose their friction. This generally doesn't happen on the weekends. If this is an international transfer, now you have to go through international banks and the system they've built to talk to each other and to keep track of what we have. And that is some of the friction that we see. What we have seen recently in terms of the friction, if we want to go a little bit farther down, what we have seen recently is the fact that banks are regulated, controlled by governments. And that's not to say it's a bad thing. They need to be regulated and controlled by governments because they're keeping track of all of our money and all of our assets. They're keeping track of what we have. But what it means is the government can impose some of their control. And so some of the things we've seen in the recent past is when in Canada, when truckers were protesting, remember, and the Prime Minister of Canada decided the way we're going to get to these truckers is we're going to shut down their bank accounts. We also saw where when the fighting started between Russia and Ukraine and NATO, that the world decided we're going to cut Russia off from the world banking system, meaning we're going to cut Russians off, Russians that may not have had any say in this, off from the worldwide banking system. And when people in Ukraine, when people in other countries have lost their bank accounts because the government just decides we're going to enforce some rules and the banks have to comply. We see those kinds of issues there that maybe now with crypto and Web3 we won't see anymore, or we'll see less of, or we can solve some of that. I'm not trying to make a political statement here. I'm trying to say this is some of the friction. Some of the other things we see, the problems in TradFi, is something that we call settlement. right? And settlement is a big deal. And that's a little bit in terms of how long it takes for this transaction to go. When does a transaction actually settle? When I go to the coffee shop and I use my credit card to pay for something, that transaction might actually take a few days to settle in the coffee shop's account. And settlement is a problem not only for businesses, settlement's a problem for individuals. If I have a bunch of contract workers and I pay them on Friday at 5 o'clock with a check, or even if I try to send them money via a Venmo or Zelle or something, they might not have that money hit their account till Monday or Tuesday. Well, what if they have bills to pay over the weekend? They don't have the money in their account. So settlement is a problem. The fact that we have to wait for the banks and their timing to settle accounts, to settle money, means that we, even though a transaction has actually happened, we don't have the money actually settled. It could be something like trading for stock. We saw settlement as an issue, and this is not a payments thing, but we saw settlement as an issue with the meme stocks, with what happened with GameStop. Settlement was an issue. The fact that there was T+2 settlement on some of those transactions, T+2 meaning once I trade stocks, once I trade equities, it actually doesn't settle for several days. That we saw where that was a problem. So settlement is an issue in traditional finance because it might take several days to settle. We have to wait for the banks to clear everything amongst themselves the way they do it. Again, we outsourced a lot of trust and a lot of need to those banks for years because we had to, because we couldn't necessarily trust each other. I couldn't, say, Ron, I promise you the money's on the way, it's in the mail or something. In the past, we might trust the mail, right? Look, Ron, I sent you a bunch of cash, but that doesn't work anymore. You don't send cash in the mail. So the settlement, the friction, the fees that the banks can charge, and the fact that because of these because they control these rails, they have a tremendous amount of power. And because when the government controls the banks, the government has a tremendous amount of power over us because they essentially control our access to our own money. So those are some of the issues that we're seeing in traditional finance that we are trying to solve, or maybe attempting to solve. And it's kind of what Bitcoin started out trying to solve. So after I explained kind of how the payment system works in traditional finance and where we are, I wanted to explain, here's some of the problems that we see. Here's some of the issues that maybe we're able to solve using this Web3 technology. In the videos coming up, I will go over how we might be solving some of those problems and what we might be seeing in the future.